Hello and welcome everyone to another Sharewise webinar. I'm your host Sebastian Saracito. Here today I'm joined by Managing Director Andrew Corbett of Kingston Resources. So thank you very much for being with us today, Andrew. Just quickly a rundown the way this is going to work. So Andrew will do a presentation of the company and I invite all the participants to use the Q&A function if you have any other questions that you want to be answered. Andrew will be more than happy to answer them at the end once he's done the presentation. And we'll just have a few questions from a couple of registrants and from the company as well after. But yeah, over to you, Andrew. Thank you very much.
Thanks, Sebastian, and thanks everyone for your time, and appreciate everyone's very busy and looking for new stories and exciting stories, and I hope Kingston's one of those for today. So I'll just share these slides. Right, there we go. So look, okay, Kingston Resources, let's start with a little introduction about myself, and then I'll talk through the company and the history. So I'm a mining engineer from Western Australia, so WA School of Mines graduate a long time ago now, and have been basically in industry for over 30 years. I did do a period of about 6 years, 6.5 years as a fund manager and analyst here in Sydney, and we are our head office for Kingston is in Sydney. So Sydney's home now. We left Perth in 2004 and have been over the East Coast in the mining or in finance, investing in mining. So we picked up Mineral Hill in 2022. It is our first producing asset. We were a developer, explorer of gold and copper and lithium for a period as well, very early on in our phase. So we took over Kingston, did a reverse takeover of Kingston in 2016. And we've been building the company and the asset base up ever since. So Mineral Hills is our first producing asset. As you can see, there's a nice picture of the ROM loader loading the crusher on site. I'm just trying to get my slides to work. There we go. I'll just pause on this. The disclaimers I will get you guys to read at your leisure, but there's a nice picture there of Mineral Hill. You can see it's quite a compact site. You can see the tailings dams in the background there, and that first tailings dam you can see with a bit of water in it, that's actually the dam that we processed 1.6 million tonnes and sold $99 million worth of gold from. So it's been actually a really interesting story for us, and very successful story, the reprocessing of the tailings. So when we took over Mineral Hill in January 2022, we had 2.5 years of mine life. We are now just over 2.5 to 3 years into it, and we're looking at coming up with a new life of mine plan very shortly in the next few weeks on extending our mine life. We currently have around 4 years, but you should be looking for that to increase by at least a couple. And we'll keep adding to that as we start drilling after Christmas this year as well. So our mission is to grow Mineral Hill from the 2-year mine life, push towards that 7 to 10 year mine life, and then work out how we can expand the processing plant. The processing plant we have just commissioned. It has not operated for 8 years. The crushing, grinding and float circuit, we've just spent $13 million. And in less than 6 weeks, we've ramped that plant back up to full run rate. And we are selling gold and silver doré from the open pit production. And underground production will start in 26. And that brings with it the copper production. So copper and gold will be our dominant base and precious metals for the next foreseeable life of mine at Mineral Hill. So it's a really good story from that point of view. They're the two high value metals in the space, and they're going to be over 80% of our revenue. We are looking to expand in New South Wales. We want to grow the company. We want to grow the business. We were looking to explore it within our own deposits and expand Mineral Hill Mine, and look to whether there's logical bolt-on acquisitions, resources that can be processed and trucked to Mineral Hill. So let's see how that plays out over the next year or two. Our priority number one is exploring and adding tonnes to our own deposits and ore bodies, because we already own them, and then we'll start to look at what makes sense. Strategic advantage. So we've got 2 projects, what we class as a growing asset in the Cobar Basin, which we own 100% of at Mineral Hill, but we also have the very high value Misima gold project in PNG. I'm going to spend a bit of time talking about PNG because in this gold market and in this gold price, I think it's a very attractive asset to deliver shareholder value. Just a quick one on the capital structure. You can see there, 700 million shares on issue. We're just under 60 million market cap. Very cheap for what we've got ahead of us in terms of our production, our cash flow, and our mine life. So cash at the end of 30th of June was just over 8 million. In addition to that, we have another 7.4 million of cash for the environmental bonding. We do have $15 million of debt, which has got a good runway on that. That's sort of 3 payments over the next 2 to 3 years. So we've got a very strong balance sheet and hopefully getting a lot stronger as we generate cash flow from these open pits. Share price has been very stable, bouncing around this 8 cents over the last year, and we've got strong support with our shareholders. So Delphi's at 15%. Quintana are the organisation that we purchased Mineral Hill from. So they are strong supporters of ours at 9%, Winchester just over 9%, and then Farjoy as well at 6.7%. So 4 substantial shareholders. There's a nice picture of the Pierce North open pit, which we only started mining in June. We're owner mining this, so we're very proud of the 40 people that we've got on that project operating, driving those trucks. We've trained majority of these people up. Some of them obviously had some experience, but it's a very rewarding process for Kingston as we hire locally. Most people either live in Condobolin or drive out to the project, and we train them up and offer them a future in the mining industry and specifically with Kingston. The Pierce open pits are set to run for about 15 months or a little bit more. There's just on 500,000 tonnes in resources there, and a nice 3 grams plus 3 grams plus the silver. We have updated that resource base recently. As you can see there, the tonnes have increased and the metals increased for both gold and silver respectively. So these are basically the next 15 months and will generate the cash that puts the company in a strong position to grow and expand as we bring the underground online in late 25 and into 26. What's it look like? So when we purchased Mineral Hill, as I said earlier, we processed the tailings. We made some really good money out of that, 26 million of operating cash flow, just under 100 million of sales. That money has been injected back into this project. But when we purchased Mineral Hill, it came with the resource base and in 2 existing undergrounds. We have already pumped out the southern ore zone, one of those undergrounds. We've re-established communications, ventilation, bolted and meshed it, and we are back in that area ready for mining once the open pits are finished. So our initial focus is the southern ore zone, which is down here, which is a polymetallic. That's the 3.8 million tonnes gold, silver, copper, lead, zinc. And our plant can handle all of those metals. We will be producing copper, lead and zinc concentrates as well as gold and silver doré. So that's really interesting. So at the moment, our focus has been on southern ore zone, and Jack's Hut is to follow that. And then we still have areas of the eastern ore zone, GD 140 and Parkers Hill, which we haven't actually progressed into the mine plan yet. So that's all still to come. So we are very confident that this underground will continue well beyond what our current life of mine is suggesting. We just need to get in there, do the work, drill the holes and keep growing the project. The future of Mineral Hill will be underground, so we don't have a lot of open pits, and that's historically how it produced previously. So it operated for 15 years, majority of which was from underground mining. So we've got 3 priorities right now to grow Kingston. It is to obviously grow our cash, to get a strong balance sheet, be in a position to invest in the project, expand the project at Mineral Hill and keep building for shareholder value from our current asset base. But basically, we want to capitalise on our fully approved and operating plant. We want to explore around Mineral Hill. We want to look at the regional opportunities around Mineral Hill, and we want to look at the expansion of the Mineral Hill project. Currently, Mineral Hill is running at just under 400,000 tonnes per annum through the plant. Now, we have a CIL that can run at 700,000 tonnes, but we are constrained on the grinding and the float circuit at the moment around that 400,000 tonne number. So that's basically our own organic expansion opportunity to look to see to build our tonnes in our mine life so that we can justify that expansion. And then the third priority right now, and this is actually becoming quite important for us, particularly in this gold market, is to realise value from Misima. We purchased that project in 2017 as a joint venture. We now own 100% of that. We would like to progress it to production, but it's a very big project, so we need a sale or a JV for that to actually realise the value for shareholders. So Mineral Hill, the focus is obviously open pit mining, followed by the underground, a JV or a sale down of Misima to deliver value, and then we keep growing the business within Australia. So quick snapshot on sort of the project. As I said earlier, we commissioned the open pit in June. We commissioned the plant at the end of July. We really start, this throughput chart there shows you the last 4 weeks. Within that 4-week period, we actually reached nameplate, which is an outstanding achievement from the guys on site. We are currently just feeding oxides, so that's why we're able to run the plant above nameplate at this 400,000 tonnes per annum. It's consistently performing very well. Recoveries are excellent. And our cash flow is starting to steadily increase as we ramp up the mining and the throughput. Nice picture there of a shipment. That was last week's shipment. 20% of those bars are gold and 78% silver. Obviously, you can see the silver colour. But by weight, they're mainly silver, but by revenue, they're majority gold in terms of revenue. So we're loving this current spot gold price. We're fully exposed to the gold price. We're unhedged. This is a nice overview of the project. We need to actually update that slide because you can see the Pierce North open pit is just a gold star at the moment, whereas we currently have a project there which we're currently mining. So Pierce North and Pierce South are going to be the production fronts for the next 15 months or so. Then we go underground at the Southern Ore Zone with that decline that's already in place. We've got 5 priorities within the mining licence. And our EL 8334. So they're our sort of main focus areas, and the mining licence is our #1 priority, being continuing to grow the resources and the reserves to expand and grow the revenue line and generate more cash and cash flow for shareholders. So that's our focus. Southern Ore Zone, you will see us drilling that in the near future. That will be both extension and infill drilling. We have a very exciting target in the Southern Ore Zone where we think we've got at least one more footwall lode that we've discovered, if not more. Parkers Hill GD140 will follow subsequent to that. Then we'll be starting to look for extensions and growth in both the Jacks Hut and the Eastern Ore Zone underground. Our first surface or new target is an area called Bogon, which is that #4 on the map there. That's just sits adjacent to our mining licence, and that's our highest priority exploration target, we call it. And then we've got 2 or 3 targets, which I'll talk about on the next slide, in our adjacent EL at 8334. So as you can see from this overview, it's a very tidy and very small site, which allows us to actually keep that environmental bonding number down as low as we have currently at 7.4 million. And that's really important for, a lot of projects nowadays have come with big rehab liabilities, and Mineral Hills is not one of them. So that's great. This is the exploration EL that I just talked about with the priority targets. So you can see down here, sort of in the southeast corner, is the MLs. Then we have 1 EL surrounding the MLs, and then the much larger EL 8334 with 3 priority targets at Webster's, Gossan, Long Panel, and China Workings. All very interesting geochem, lead geochem soil anomalies. We're at the early stages now, working up the priorities of where we want to drill in those areas first. I will point out that Talisman, our neighbours, are drilling just down to the southeast of us, about 11 k's away from our plant, at a prospect called Durnings, and they also have a prospect up to the north of Weber's, Gossan, up there, called Rip and Tear. So our neighbours are getting some good drill hole success. So there is a lot of confidence with our ground and our ability to keep growing. Strategically, I said earlier that we think the operating plant and our approvals are one of our biggest assets, and along obviously with our people. So Mineral Hill is the only operating polymetallic plant with the CIL in the Southern Cobar Basin. So what does that mean? It means we can process copper ores, lead ores, zinc ores, and gold ores. So it's a multi-purpose plant that can actually treat all resources in the Cobar basins. There is only 4 operating plants at the moment: Peak up here into the north, CSA, and Tritton. And and ourselves at Mineral Hill are the 4 operating plants. There are currently 3 other plants that are all on care and maintenance. My view is that Cobar Basin doesn't actually need any more plants. Between the 4 operating plants and the ones on care and maintenance, there is more than enough infrastructure to process and be quite a profitable region, delivering critical minerals, being copper, lead, zinc, silver, gold, for New South Wales. So we're very excited about what we can see here opportunity-wise. A lot of people talk about, well, what's your optimal trucking distances? Well, my comment to that is, well, let's see, depends on the grade. When we don't have to build a plant and we are fully operating like we are, there's a lot of ability to truck ores to Mineral Hill. So obviously we're looking for our own extensions to justify our expansion within our mining licenses. Then we're looking at our regional targets to justify our expansion, and then we'll start to look at whether there's resources that make sense to process at Mineral Hill. Now, we don't have to own those resources. There could be a toll treating or joint venture arrangements. Either way, we're looking to grow the size and the cash flow from Mineral Hill. So this little graph here, which is a very simple graph, but it sort of shows how we think about it. We are currently constrained at that sort of 380,000 tonnes on underground feed, and we're running at 400,000 tonnes per annum on open pit feed. But our CIL can do the 700,000 tonnes. So our aim in the future is to get them both to that 700,000 tonnes per annum. Let's talk about Misima. It was our cornerstone asset. We picked up in 2017. We advanced that from an exploration project that we drilled for 3 years, through studies to DFS, definitive feasibility study. And we got to that point, and the capex number at 470 million was obviously beyond us. So we've paused on the project. We still have a small team on the island where we're sort of in care and maintenance mode while we look for a joint venture partner to help either JV with Kingston or progress the project to develop to production themselves. We want to see a return for shareholders, and we want to try and maintain exposure to the project. So it's quite interesting. It is a 20-year project, already has 15 years in reserves, average 128,000 ounces per annum, up to about 140,000 ounces per annum at its peak. There's obviously opportunities to expand that once it's in production. Our base case NPV was just under $1 billion, Aussie dollars, but the gold price has moved a lot during that period. So current NPVs, well, at $2,000 gold price, it was 1.3 billion, and currently gold's another $500 higher than that now. So US dollars, so it's over 2,500 to 2,600. So you're talking about a project that's got an NPV of over $2 billion now, and we're a market cap of 60. So that's the opportunity. Obviously, the project needs to be built, and we need a significant capital injection to do that. So that's why we're looking at this JV process. We've had a number of companies interested, but neither of them have felt the urgency to move. So we're looking at changing that, and looking at formalising the process to get some competitive tension into the opportunity at Misima. We would like to see something occur with that project, or the project, to progress this financial year. Just some highlights. So 3.8 million ounce resource, 1.7 million ounce reserves. There's a lot of silver and gold in the project. 2.4 million ounces of production over the 20 years at a very attractive all-in sustaining costs of 1,200 Aussie. That might be up a little bit higher with inflation now, but either way, the gold price has moved materially more than any inflation that we would have experienced since we did these numbers in 2022. So it's a very exciting project for both the people of Misima and shareholders of Kingston. You can see there down where it is. It sits down here on island. 7 million ounces of gold endowment, and what that number means is it's already produced over 4 million ounces, and that's our current resource base on top of that. So it's a big project with a lot of gold. This is the island you can see here, and why we've included this slide is just to remind people that we are the only EL on the island. We are the only sort of operating ASX listed company, or even any other TSX listed company. So there are local landowners that do artisanal mining, but our project sits basically in the middle of the island, and the open pit is 2.5 to 3 kilometres long. So it's a big project, plenty of exploration upside. We've stopped drilling on this tenement because once we got to 20-year mine life, we felt we didn't need to keep drilling. But there's a number of step out projects and exploration targets at Misima. The gold price, I'm not a big fan of showing gold price charts, but I think this one tells a story. So Misima produced 4 million ounces of gold from basically 1988 out to 2004. And you can see what the gold price did in that period. It was actually quite low. They still made a lot of money from the Misima Gold Project. It was decommissioned and turned off in 2004. We got involved in 2017. You can see the number 1 there, and you can see 1, 2, 3, 4, and 5 with our milestones as we progressed that project. Most importantly, you can see the direction of the gold price, and this is why Misima makes a lot of sense in this gold market. Could be a very valuable asset. So I'll summarise now and open up for questions, but we're a very focused mining team. We don't see ourselves as a greenfields explorer. We see ourselves as a developer and a miner. We want to explore to build mines. So that's our focus. Our traditional strength is in gold and copper. So you'll see us stick to our knitting and be very focused on precious and base metals. We think Mineral Hill is a really good starting point for Kingston shareholders. It's our first producing asset and hopefully not our last as we grow the business. We are looking to boost production, expanding it from the open pit feed into the underground, get the copper cash flow flowing, and then look to see if we can expand this processing plant. We want to take full advantage of our fully approved project. We're approved for 700,000 tonnes per annum, and we've got the people on site to operate at 700,000 tonnes per annum. So we really want to take advantage of that. And then we've got the leverage within the company with the Misima Gold Project. It is a large project, it's long life. It could be a lot bigger than the 128,000 ounces per annum. So it's exciting for a lot bigger company than Kingston. Would we like to build it? Yes, we would, but we're just realistic around the capital required to do that at this point with our development and being a 60 million market cap. I'll pause there, Sebastian, and let's ask some few questions. Do you want me to stop sharing?
No, that's okay. No problem. Thank you for that. That was pretty insightful. I'm sure current and prospective investors made a lot of good use out of that. So thank you very much. We do have a couple of questions just from the registrants, and obviously, as I said, feel free to put your questions in the Q&A function. But we do have one from a viewer at the moment. So I guess obviously the Misima project is sort of a gold producer from what I understand. They want to sort of just maybe go into a bit more detail. Their question is, can you enlarge on what you are actually doing at Misima? If you just want to answer that really quickly.
Yeah, so our priority right now, so what we've done with Misima is we've got the approval documentation to about 95% complete. Until we have a funding solution or a joint venture, we can't actually submit those approvals because you've got to be able to demonstrate an ability to fund and build the project. So that's what the focus has been for the last 2 years, is getting documentation and approvals ready. And we are talking about a lot of documentation. You're talking, it's well over 10,000 pages of documents and growing, right? So that's what we've been working on. And right now, what are we doing? We're working on a land ownership study. So one of the key aspects of Misima is being able to accurately identify the landowners and who are the beneficial owners of the ground which we want to mine. So that's really important when we go to get our development agreement and our approvals. We need to know we're talking to the right landowners, because it's very easy in PNG and other parts of the world as well to actually have people claiming they're the rightful landowners, but you need to prove that. So that's where we go through a lot of family trees, tracking, and a lot of actual mapping of generations of Misimans to make sure we can accurately point to the right landowners. So that's what we've been doing and what we're currently doing right now.
Brilliant, thanks for that. And I guess just to tie into that, another question from the audience: what was the gold price assumption used for the Misima feasibility study?
1,800 US at 70 cents FX exchange rate. So that's about 2,500 Aussie versus 3,800 today. So it's up. That's not quite double, but it's 70-80% higher than what we did on the feasibility. So It made a lot of sense when we did it at 2,500 Aussie, and now it makes a lot more at 3,800 Aussie. So it's very, very exciting project.
Brilliant. All right. And I guess another question we have is the current level of interest in the Misima project more than a cursory glance by other companies? And what have been some of the difficult aspects of farming this project out, would you say?
Yeah, so it has, in some cases, it has been, tire kickers or cursory glances is a good way to put it. And then there's been probably a handful of groups that are much more interested. And have looked in our data room and done a lot of reviewing and a lot of work themselves. So the challenge we've had with Misima is we haven't run it as a formal process. It's been an ad hoc process, but we need to formalise that so that we can actually put some timelines on people to actually get them to make a decision if they're interested or not.
Okay. All right. I think a lot of people here are pretty intrigued about the Misima project. So we've just had another one come through. Do you foresee any issues with the tailings at Misima?
No, I don't. You got to be comfortable with deep sea tailings. Misima was deep sea tailings when it operated for 15 years, and it will be the second time round. The Misiman people are supportive of that, and the approval from the regulators are supportive of deep sea tailings. We've done a lot of work. We're very comfortable with it. We understand what are the pros and cons of deep sea tailings versus land storage tailings, and deep sea tailings far outweigh the advantages versus a land tailing. So you're talking about Misima has 4 meters of rain per year. It is in a seismic region, and it is very soft ground. So you don't have lots of hard, competent rock to build tailings dams out of. You've got too much water to deal with, so your dam would fill up with water all the time, and you've got seismicity to manage. And on top of all that, you've got people that live downstream. So deep sea tailings is what Misima will be, and I do not foresee a problem. I just want to also point out that Lahir is deep sea tailings, Simbiri is deep sea tailings, Ramu is deep sea tailings, Woodlark is approved for deep sea tailings, and I think Wafi Golpu, which is pending approval, is also going to be deep sea tailings. So it's coming.
Okay, brilliant. Thanks for that. And another question: if the plan is to double cash flow over the next 12 months, what effect will that have on costs?
If the plan is to double cash flow, so we will almost double our cash flow year on year regardless. So we did, I think, 39-40 million from the tailings last financial year. With our current plant and throughputs and grades, we'll be pushing towards 70 million plus this year anyway. So there isn't a capital spend on the current plan. I actually talk about this a little bit. We're almost ex capital in terms of our big spend. So that 13 million on the plant is now complete. Capital wise for the next year, it's about $6 million, 6 to 7 million we've got to spend, but that's going to be funded from cash flow, and that's already in our numbers. And then the following year will be a similar number, about $6 million as we get into the underground. So those numbers will be funded from operating cash flow.
Okay, brilliant. Thank you. Another question from a registrant. So your plan is to transition to profitable open pit production without needing additional capital. What are the top 3 risks to achieving that, and how are you managing those risks?
Yeah, we're actually through. It's funny. We're actually through the worst of the risks in terms of we've got all the people on site, the approvals are in place, and we've already ramped the plant up. So right now the focus is ramping the mining up. So the mining team is new, so their number one priority is to keep growing the daily tons moved and delivering more ore to the ROM. So that's our priority right now. We've been very comfortable. We have ore on the ROM, and we've already kept the plant full since we started. So they're doing a good job, but we are trying to push that harder now.
Brilliant. One more question's come through. So they ask, an AIC of approximately $1,350 was forecast for the current open pits at Mineral Hill. Would you think that figure is still accurate?
That number seems too low to me. Sorry, I think it's going to be a bit higher than that. With the silver credits, I would have thought higher, about $400 to $500 higher than that. So we haven't provided guidance on the open pit costs since last year when we did the life of mine work. So it is higher, but these pits are very profitable, and we get a very good silver credit.
Okay, thanks for that. I've got a few more questions, and then we'll wrap it up. So we've got another one. Can you give us any progress updates on being ready to commission the flotation plant in October and transition to sulfide oil production?
Yeah, we will be wet commissioning the float plant by the end of October. So what that means is, while we're still feeding ore through the CIL, crushing, grinding through the CIL, we will wet commission the plant. There is no change to that schedule at all. Very confident with being in a position to do that. I don't think we're going to need the float plant until December, and we might even be able to push that a little bit further than the December. So why I say that is it looks like we've got a little bit more oxide tons than we were planning, and the recoveries are going very well. So the longer we can keep the CIL only going, then it's better for us in terms of working capital and payabilities, because we don't have to sell offtake. So the float plant will, as I said, will be wet commissioned by the end of October and be ready to be used in November onwards. But I don't think we'll need it until December at the earliest.
Brilliant. All right, and I guess another question here is, why did the previous owners of Mineral Hill fail, and what are you doing to sort of manage the risks that they couldn't, I guess?
Yeah, very good question. So then that's the opportunity, right? So Mineral Hill had $53 million worth of debt when it went into administration. So there's the first big difference. We've got $15 million, and we're trying to now pay that, reduce that, and not let that grow. So they had a lot of debt. Commodity prices moved against them, and the Aussie dollar went to parity. So commodity prices came down, and the Aussie dollar went through parity. This was in 2015 and 16. So they had a headwind with the commodity prices, and they were struggling with keeping enough dirt in front of the mill. So the mill was never really full. So those things all contributed to that. Now, why wasn't the mill full? Well, there's a lot of detail and reasons on why. It was down to how they were drilling practices, geotechnical reasons, lots of reasons, metallurgical reasons, but all because they had a high debt burden. They just did not have the cash flow to be able to do all the work they needed to do in a timely manner. So they were always chasing their tail. But commodity prices, a lot lower commodity prices and Aussie dollar parity would be tough for the whole mining industry, let alone just the guys that were running Mineral Hill.
Okay, thanks for that. And I guess just to wrap us up, could you please explain what actions are and have been taken to establish a partner for Misima now that the gold price is so high?
Yeah, we ran a formal process in 22. And that wasn't successful, but that was mainly due to the gold price and the lack of interest in gold projects. So what we're looking to do now is to restart a formal process. So as I said, we've been running an internal ad hoc process, but now we're looking to formalise that. So we'll update everybody on that as we finalise that, but it's going to be definitely before Christmas, starting a formal process on Misima, possibly as early as next month. So we're working on that now. We're going through, and why it's taking time is because it is a project in PNG, and we want to go to somebody that has a global reach and who can basically get international groups looking at Misima, not just Australian groups. So that is taking time, and we want to also get the right group. So, but as I said, we want to progress Misima this financial year.
Okay. Brilliant. And we just have a couple more live questions from the audience. So one is, when you are generating operating cash flow beyond what you need at Mineral Hill, as an example, upgrading the plant size or acquiring nearby stranded assets, how are you planning on deploying capital? For example, dividends, acquisitions, buybacks, etc. Yeah,
I'm really looking forward to being in this position. And a few people have started to ask us about whether dividends are part of our strategy. That's a board decision, and I can't speak for the whole board, but we will definitely consider it. Shareholders like getting dividends and getting money back as much as we like it. So the board and management want to. So it's definitely part of it. we'll need to get our balance sheet in order, obviously pay back our debt. We want to make sure Mineral Hill's got the right mine life, and the expansion options are all in, self-funding. So once we get to all those positions, absolutely capital management will be on the table. But we've got a lot to do before then. We've got to obviously pay the debt back and also expand the project. So like I said, I look forward to being in that position where we've got too much cash and we give it back to shareholders.
Yeah, brilliant. All right. And just another one, what gold recoveries do you expect from open pit sulfide ore?
Yeah, no, the oxide ore is 85% is the budget for oxides, and for sulfides it's in the low 70s. 72, 73% on sulfide recoveries through the float plant.
Brilliant. And last but not least, when do you expect to earn positive operating cash flow from gold/silver doré production and gold/silver concentrate production?
Next month.
Brilliant. It's as straightforward as that.
Yep.
All right. Brilliant. Well, I think that's going to wrap us up for the morning. Thank you, everyone, for coming aboard. It was a very interactive webinar, so that was brilliant. Thank you, Andrew, for being such a great guest. If you guys want to, watch this back, or I guess if you missed it, it's available on our YouTube. So if you type up Sharewise on YouTube, it will come up. But other than that, is there anything else you want to add, Andrew?
No, look, thank you, Sebastian. Appreciate the support and the opportunity, and really good to have interactive questions. It makes it much easier. Obviously, if there are more questions, fire them through at info@kingston.com.au, and we'll try and get back to you guys and girls, whoever are asking. And look, yeah, it's an exciting time to be building a gold company. I mean, we're less than 18 months away from copper as well, so it's a pretty interesting time for Kingston.
Okay, brilliant. Well, thank you everyone for coming. Thank you, Andrew. And that'll do us for this morning. Have a good one, guys. Thank you. Take care. See you, Andrew.
Cheers.